What does that mean? It means that theoretically, someone using my strategy with $240,000 in their account could be making roughly $10,000 a month. All right, ladies and gentlemen, so the Fed has cut interest rates by 0.5 point. I want to get this out very, very quickly because of that. I got a narrow window to make some pretty good profits. I'm sitting here selling options for income. This is my journey. I'm on day, 79, 80, something like that. I'm documenting this I have an entire playlist starting with day 1. We're using the Derive platform, and I'm going to show you exactly what we're doing. I'm going to explain everything here in a moment. Come to position. So my actual account value for options is at $20,654. Collateral value, which is what I really care about. If all my options expire, I'll be sitting on $20,945. Everything looks good. But I'm about to sell some more options. I have $2,700 in buying power right here, and I need to sell some options. So I'm going to come to options. I'm going to come to, I need to sell calls. The puts is good. The market's going to keep dropping. It was up when I started this video. So let's come here real quick. Normally I would be selling puts right now, but I think the market's likely to keep going down. I'll explain after I sell these here. I was hoping I was going to be selling at 27. All right, let's go. Let's go ahead and sell here. This is a higher delta than I normally sell. I'll explain it after I make this, after I sell here 3. That's going to get me to, this is going to be a good, let's see, back up. Look at the market dropping. Oh my goodness, I should have done this sooner. I was up at about 50% a minute ago, and it's still dropping. So this is going to get us about 3, almost 4% in about 2 weeks. A bit higher delta. Let me do 6. I'm going to do 8. I'm going to use it almost all of it. 9. Okay, we'll do 8.9. This is a little bit of a risky play for me, riskier than I normally do, but I'm going to do it, and I'll explain after I make this sale here. Okay, so if you follow my channel, you know that normally what I do is I would normally sell, I would sell in the direction of the market most of the time. So if the market's going down, I would sell contrary into the market, not with the market. So I would normally sell puts below the price, because keep in mind, selling a put is actually bullish, but I'm selling it way out of the money normally, and I'm going to be using a delta between 5 and say 9. This is a delta of 13, and this is for a call, which keep in mind, if you buy a call, it means that you essentially are making a bet that the price is going to go up. I'm selling a call, which is making a bet that the price is going to go down. Now, the reason I'm betting that the price is going to go down is because if we had a spike this week, I thought it was going to be after the rate cut that we got today from the Fed. Now, here's the thing. I actually think the rest of this week is most likely to be bearish news for crypto and the markets as a whole. I'm going to do an entire video on the rate cut that took place today. I plan to anyway, but I think that rate cut is actually bearish for the market, because I know everybody else thinks it's bullish, but I think it's bearish because of the dollar-yen exchange rate. The U.S. dollar right now, when they cut the rate, what they're essentially doing is they're weakening it compared to the yen and Japanese yen, and this is the same thing a couple months back that caused the whole market to crash, because the Bank of Japan ended up raising their rates, and they meet this Friday. Now, if they do nothing, it's neutral. It's a neutral sentiment. But if they end up raising the rates, then I think that we're going to see potentially another liquidation event, and that's going to be bad for the markets as a whole. So I wanted to go ahead. I could be wrong. I mean, this could end up biting me here, but because of that, I felt like I wanted to sell calls above the market because somebody's going to be trying to buy those calls. And I was able to sell them for $12. I sold, what did I just sell, like 8 of them or whatever. So I just basically made, if I sold 8, I basically made 80 something dollars, 90 something dollars just now. And so we can go take a look at that real quick. We go to home, go back to positions. So here we are. Our collateral value is over 21,000. Our collateral value is over 21,000. And this is what we did. We sold 8.9 calls. So we essentially, sold those calls for $12.50. So quick math there, calculator. So let's go here to 8.9 times 1250, because I don't remember where we were at earlier. So I just made $111. That $111 got added to my collateral right here. And as long as the market doesn't close above 2,600 by September 27th, this will close out for a profit. Now, if the market starts to move against me, keep in mind, I'll just roll this option out to a later date. So I'm not too worried about it. And it looks like we're closing the gap. The reason it's negative is because of the spread. This was the sell price, this was the buy price. So that's why it's a little bit negative, but I'm not too worried about it. This is, keep in mind when you sell options, you got theta decay working in your favor, which is the option price is going to continue to go down. Literally, theoretically every hour, but literally every day between now and the 27th, the price is going to continue to go down. So we are going to be hitting all-time highs with our actual account value, but our collateral value is sitting at an all-time high now. We are at 21,000. Just to put that into perspective, we've already made, we're sitting on the 18th and we've already made about $500 this month in our collateral value at this month. So our goal is to be able to earn $1,000. We're going to probably hit really close to $700, assuming this wasn't a bad sell. I don't think it is. We'll have to wait and see. We'll definitely know by Friday. If the Bank of Japan does something crazy and cuts their interest rates, if they do that, then it might actually cause the market to spike, and this could be bad. But nobody's expecting the Bank of Japan to cut their interest rates. And if they did, they wouldn't cut it too aggressively. I don't think anyone's expecting them to cut their interest rates, but they could potentially do nothing or raise their rates. And if that happens, this could be a bad move. But normally I would not sell on a delta. Keep in mind when you're on options, and I'm repetitive, by the way, for those of you who follow my journey, just because there's new people watching videos all the time. But keep in mind on options, your delta is an inverse, a rough percentage. The inverse of your delta is a rough percentage likelihood that the option ends up closing profitable for you. So since I ended up, whatever it was, a 13, I think I was at a 12 delta earlier. That means at that point in time, I had a 78% chance, or 88% chance of this thing ending up profitable for me. Right now it's 87%. So we're back to 88% chance right now, roughly. And as time passes, if the market does not move, if the price just stays the same, this delta will slowly tick down, because the likelihood of the market moving with every passing day before the 27th is going to go down drastically. So I don't usually, a lot of times people who watch my videos say, hey, how do you know which way the market's going? I'm typically pretty contrarian on the market. We have a 3%, 4%, 5% move in the market. I'm usually selling the opposite direction most of the time. And that's it. And I'm selling somewhere between 90 to 95% probability of the trade being successful. So, if I have a 90 to 95% chance of success, I'm going to take that trade all day long. If you have questions, let me know down in the comments. If you want to follow my journey, be sure to subscribe to this channel. I am going to continue selling options. And who knows, by tomorrow, the next day, our account value is going to keep ticking up. And when all of our options expire, as they should, we're going to have over $21,000 sitting in this account. I will tell you, conservatively, I should cross $1,000 a month. Conservatively, I think when I get to about, without taking risky trades, I should do that conservatively when I get about $24,000 in the account. What does that mean? It means that theoretically, someone using my strategy with $240,000 in their account could be making roughly $10,000 a month. And when you put it in that kind of perspective, I think you realize that selling options can be insanely lucrative. And by the way, I'm unlocking more buying power. If I keep unlocking buying power, I'm probably going to keep selling more options. So if I get another, say, $330, because I usually like to get about one contract, so about $330 per contract, then I'm going to sell options. If you want to know more about what it takes to get started with the options, you have any questions down below. You have any questions, put them down in the comments below. Thank you so much for watching, ladies and gentlemen. This is Crypto Wealth. I'm out.